everybody, and welcome back to the Patient First podcast. I'm your host, Dr. Bryan Laskin, and as always, I'm excited that you are here. And oh my gosh, we have a great guest today, Mark Gaunya, who is principal at Borslow Insurance and founder of Captivated Health, bringing over 30 years of expertise in employee benefits and healthcare strategy. He serves on multiple industry boards at the state and federal levels and is dedicated to improving healthcare outcomes through education, advocacy, and creative financing. His leadership continues to drive positive change for clients, consumers, and the broader industry through his work on the NABIP Healthcare Consumer Bill of Rights. Mark, thank you so much for being on the podcast.
Bryan, thanks for having me. Always a pleasure to be with you.
This is a big topic. In dentistry and on this podcast specifically, we're talking a lot about medical dental integration. We talk a lot about the connections between what's going on and how we can bridge those gaps in interoperability. And today we're talking about sort of a unique aspect of that, which is the medical insurance for dental employees. Right. And so, could you talk a little bit about how you got into the field?
Sure. Happy to do that, Bryan. I'll start at the beginning and blame it all on my parents. My mom was a cardiac rehabilitation nurse, and my father was an orthopedic sports medicine physical therapist. They're both gifted clinicians in their own right and just wonderful people. They introduced me to the whole healthcare sector as a young man. My dad actually was an entrepreneurial physical therapist who created a business from nothing with my mom that had 6 outpatient facilities for physical therapy. And my father, he was a gifted clinician, but he also is a people person. My father's still alive. My mom has passed away. She passed away way too early. But they're the ones who introduced me to healthcare and got me to love the business of healthcare. I was never scientifically inclined growing up. I did okay in science classes, but it just never really turned me on. Business turned me on, and I love the business of healthcare and understanding how it all works. And ultimately, my love of my life's mission of making healthcare easier and more affordable for people is really what I care most about. I use insurance as a way to do that, to help people connect themselves with high quality, lower price care. If I had to trace it to the origin, it would be my mom and dad introducing me to that at a very young age.
That's great. And it's interesting. Obviously, in my new book that's coming out, I talk a lot about the healthcare industry, the problems, and obviously insurance is a big aspect of this, right? And the business, I think most clinicians want to lift up the rug and kind of sweep the business side under it, right? But there's, everybody listening to this recognizes the differences between dental insurance, which is a discount card for dentistry, right, versus medical insurance, which is a totally different beast. And there's a lot, I can write about that for about 200 pages, right? So there's a lot going on. So you did too. I know it's a small section of my book, and it's the entire thing of yours that's coming out,
that is very
and so let's get right into it. What are you seeing that are the problems with traditional health insurance, and how does Captivated Health address that?
So if you look at the country in terms of health insurance, right? So first thing is if you're a business owner, you're an executive leader, your number one expense typically is the labor pool, your workforce, your people.
Definitely in dentistry, for sure. And more so now than ever.
More than ever, right? Because you got to pay for good people, so it's expensive. But one big component of compensation that's tax preferred is the whole notion of offering employee benefits to your people when they become employed by your business. And if you look at the benefits box, inside that box, health insurance is 80% of the cost of those benefits. So second largest expense, 80% of that expense is health insurance. And health insurance grows at 8.5% to 10% per year, every year, compounded annually. And when you look at the rate of inflation, typically speaking, 3%, 2.5%, somewhere in that range. And then you look at the overall increase in wages, right, which track ordinary inflation. Healthcare has a different trend factor called healthcare trend, which we can talk about in a moment. But it is 3 to 4 times faster than every other rate of inflation. So what does that mean? So let's translate it to Joe on the street, right? The people that you and I know and see every day. That means that their the rates and their compensation can't keep up with the rate of increase in the cost of health insurance, both for the business and for the people that the business employs. So the biggest challenge was that costs are spiraling out of control. And if you look at this country in totality, right, Medicare and Medicaid, which the government runs, insures about half our population. The other half of the population is privately insured, right? And you've got individuals, small groups, middle market, large groups that all comprise that cadre of people, roughly 170 million people that are privately insured. And we base our health insurance system on a law that happened actually after World War II that allows employers to offer health insurance on a tax preferred basis. So in other words, it's a deductible business expense, but when you charge your employees premium dollars, you're doing it with tax preferred money, right? So it's not after tax, it's before you're being taxed on your wages. So it's a good deal from a tax perspective for both employers and employees. That's the good news. The bad news is that those health insurance costs are increasing. If you're an employer in the middle market, and then when I say middle market, that's employers with 50 to employees. That's a $50 million people are in that market segment out of the 170 million that I talked about. Now, why do I single that?
I just want to highlight that because a lot of group practices listen to this podcast, right? And so they fall into that category. If you have 50 employees, that could easily be like we had 2 practices and we had over 50 employees at one point, right? So, so it's probably, 3 practices to obviously 500. There's not a, you have to be, so, if you're a small group or a mid-sized group, this is to you.
Definitely.
Correct.
And so insurance is the law of large numbers, right? And so what the middle market doesn't have is it doesn't have scale. And because it doesn't have scale, and it doesn't have access to information because the way the insurance market's been set up, much of the information you need, the health insurance carriers control. And I'm not blaming the health insurance carriers. They're one of the rule makers in the construct of healthcare. We'll talk about in a second. But the question you asked me was, what's the problem I see is it's the sustainability, the affordability for both the employer who's offering the benefit and the employee who's receiving the benefit when they access healthcare. So it is a problem that I see. It's the number 1 or 2 thing that every CFO has on his or her desk. I mean, every CEO cares about. CFO cares a lot about it because they have bottom line accountability, right? In businesses, we know that you have P&L accountability too. So they care a lot about that line item because it eats what I call margin, right? Whether you're a for-profit like your dental practices or you're not-for-profit, and we work with a lot of them too, it's eating margin. And when it eats margin, it pulls resources away from taking better care of your people and or growing your business. I see. And the reason it's the biggest problem is because people don't have any control because they don't know they can have control. And
yeah, so talk a little bit about the health platform gives people that control and how it addresses this issue.
So when you're an employer in that 50 to 250 space, typically speaking, a little bit larger, you'll get more of your data. But in that middle market segment, the way that the health insurance construct's designed, you don't have access to your information to actually know what you're paying for. You're transferring all of your risk, even risk you shouldn't transfer, your dental practices. I suspect people take good care of themselves. I suspect people live a healthy lifestyle. I suspect they have primary care physicians because they understand the importance of detection and prevention of things that can improve your health and well-being. So from a perspective, I would certainly think dental practices would be an ideal risk from the perspective that they take better care of themselves. I'm generalizing this, right? I mean, obviously there are problems inside any industry sector, but in your industry sector, I would suspect that people are taking better care of themselves. Okay, so what does that mean? That means that insurance companies, when they calculate the premiums, are looking at the health of that population, and they charge premiums based on the risk they perceive or underwrite, right? Because they go through an underwriting process and they tell an employer, here's what your risk is and here's what your premium is. As a rule of thumb, on average, it's about $10,000 of cost per employee. So if you have a 50-person company enrolled in your health plan, you're going to spend about $500,000 on your health insurance premiums in a given year. Some are a little higher, some are a little lower, but that's about, when I look at the history in the 10 individual. So that's a big expense, right? $500,000 expense for a 50-person group. And at 8.5 to 10%, if you're running exactly the way the insurance carrier wants you to run from what we call in the industry a loss perspective, right? Which translated premiums versus claims, right? And then that gets you a loss ratio. The problem with the middle market is that employers have no idea what their people are buying, and no idea as a result of that how to help their people get higher quality care at a lower price point. And so people naturally think they're doing the right things, but they might not be, right? Because the system's structured that way. And I've referred to the system, if you'll allow me just a minute to talk about that.
Of course, yeah.
There are 4 rulemaking players, if you will, in I call it the healthcare casino, by the way, in my book, because I was sitting at a casino several months ago before I started writing this book. And I'm like, God, the healthcare system is exactly the casino. The house always wins. And even when I feel like I'm winning, I'm not winning, really. I'm just losing less. And I'm staying at the table longer because I stick to games I know how to play where the odds are not in my favor, but certainly better than they would be at other games, right? So why do I call it the casino? I call it the casino because people always say to me, Mark, healthcare is broken. I'm like, no, it's not. It works exactly as it was designed. The problem is it doesn't put you and me in the driver's seat, right? You and me as consumers in the driver's seat, which when you talk NABIP Healthcare Consumer Bill of Rights. That's why we codified, 10 articles in a Bill of Rights that are all about, when I say right, it's not who's paying for it, okay? So I know right likes to be used by the left-hand side of our political spectrum to say it's a right, it needs to be paid for. That's not what I'm talking about. I'm talking about principles of being a healthcare consumer in a system that you expect to serve you. So the system I'm referencing has the federal government, a big hospital system, right? Health insurance companies, what I call the BUCAs, Blue Cross, United, Cigna, and Aetna. There are others, but those are the 4 largest. And then PBMs, prescription benefit managers. The 4 of them developed our healthcare system, and they constructed it in an opaque, mechanical way. So you know this because you're in the healthcare business. There are CPT codes in medical, right? These codes, thousands of codes that are assigned to services that you and I take advantage of to see a doctor, get surgery, get an MRI, get an X-ray, get a CAT scan, get blood work, whatever it is. There's a code associated with that service we're getting, and then there's a negotiated discount between the insurance company and the providers of care, whether it's a hospital or it's a doctor or it's a PBM. There are negotiations that happen. All this is done in the dark. Nobody knows. Like, ask yourself, and I ask people this all the time. Name one thing you buy that you don't know the quality or price of it before you make a buying decision. You know what the answer is? There isn't one, except for healthcare.
In unfair care, when I'm in unfair care, it's funny because on the back of the book it says it isn't broken, it's rigged.
Right.
And I was what it's like if you go to a restaurant and have the same experience you have in healthcare. It's like, right. And it's just absurd, to your point, right? And I would also point out to the dentists who are listening or thinking about this, it's very different, not just how insurance works in dentistry, but you pointed out about PBMs and sort of a lot of health insurance companies now own and control the PBMs too.
Correct.
So, right. And there's all sorts of completely legal, but whether or not it's, well, yeah, it's a casino. You're right. It's rigged. I would argue it's much worse than the casino because at least the casino, it's transparent. You actually have to be told what your odds are. In healthcare, it's way worse. It's like if you went to a casino and they gave you chips, but how much the value was, right? And then by the way, like everybody at the table was working for the casino, didn't know it, right? I mean, there's more analogies that like a casino that is way more absurd than the way, right? If it actually worked like, but there are things we can do about, right? And that's kind of like what I'm excited to talk exactly what, my book, I talk about how you as a patient, what to do about it. And what you're talking about is how as an employer, you can actually help. Like, once you understand the rules of the game, you can play them better, right? And that way you elevate your of your employees while also saving, right?
And this is why I love talking to you, because I don't have to explain to you what I just said. You literally discerned exactly what I said at the first part of our podcast discussion today. And employers don't think they can take control, and they can. Now, that control doesn't happen without taking some calculated risk, and we both understand that too. As entrepreneurs, you're not winning if you're not risking. And when you go to the casino, by the way, you are risking. And what I mean by the game is, it's like our healthcare is like blackjack. Like, I love blackjack. And I know the odds, if I play them right and I follow the book, I have a better than fair chance of doing okay. But there's also these card counting machines that they throw in there, and they mix the cards. And I'm amazed how the cards play out on the table. What you think is the right thing to do, you're like, what? Where did that 5-card 21 from? How is that possible? So again, but I agree with you. I think the casino is a better experience because at least they have to publish odds and they have to tell you the rules of the game. And the problem with healthcare insurance is people don't know the rules of the game. So I like to start out with helping them understand how it was set up, which is why I mentioned the 4 rulemaking entities, and then talking about, and which is going to be in my book, how you hack the system. Now, we can't hack the federal government. They are what they are. The work we do through NABIP of talking to our legislators, educating them. Our organization, as an association of over 100,000 people nationally, is focused on making sure when they have these ideas, our legislators, that the way they land, right, which is when the rules are written in a way to the people. So I'm not going to go down the path of that because that takes us off course, but I just wanted to share, we're not going to hack the federal government, but we can hack health insurance companies, the big bad hospital system in every metropolitan area that controls about 60% of the healthcare supply, every city. And I've lived in Chicago, I've lived in Boston, where I live now, I've lived in Washington, D.C., I've lived in Tampa. They're everywhere you go, there's controls the lion's share of the healthcare delivery. So you can hack that, and you can also hack PBMs. And people are like, well, Mark, how the heck do I do that as a 100-person company? And my response is, you can't do it on your own. They're like, well, then what are you talking about? I'm like, well, you have to avail yourselves of a very unique platform called a captive. The insurance arrangement has been around since the 1950s. It was used for property and casualty insurance to help organizations decrease the amount of money they pay to protect their property and their liability. Only about 15 years ago, maybe 20 years ago, there was a movement to bring captives to benefits, and specifically health insurance. Okay, so why does that matter? I look at the captive as a unique, right? So let's use the analogy for a minute. You got a football stadium, you got a baseball stadium. Now I'm talking about this as a stadium you can play a different game of healthcare in. So in healthcare, you've got the fully insured stadium, and then you have a self-insured stadium. But problem for smaller employers is they're not large enough, right? So their claims experience is not as predictable from year to year because they have large claims that expose themselves. Somebody has a premature delivery of twins, $500,000 baby, right? And somebody has a very severe cancer claim. It's $1 million for them to heal, to be recovered. Is that underwriters try their best to predict when they're going to happen, but there's still a probability, usually 5%, probability that they could be wrong. So what does that mean? What that means is it impacts smaller groups in a much bigger way. You have 3 or 4 really sick people inside a 50-person employed group. You're going to have very high health insurance premiums to cover the risk of those 3 or 4 really sick people, even though the lion's share of your people are healthy. Okay, so what a captive does is it allows unrelated organizations, like your dental practices, right, to self-insure their own risk for their own people, but then share risk with other dental organizations who are in this, right? So let's say you and I own a practice and we both have 100 employees each. we participate in this community, in this platform called the Captive. We self-insure our people, but we're also mitigating sharing that risk through a series of contracts. And we don't have to talk about that because that's boring. No one really cares how the watch works. They don't care. They just want to know what time it is. Okay, great. Well, this will mitigate the impact of large claims. So what do I mean when I say that? Every group has a limit of liability per person, right? So they have a cap of liability for every belly button. It's not just employees, it's all their family members too, right? Because you're insuring, in many cases, not just the employee, but their family. So a 50-person group is really a 100-person group because you got all the dependents, right? So every group, every employer has a limit of liability. Let's call it $50,000 in this example, right? So if you're a 50-person company, you'd have a limit of $50,000 of liability for each person you cover. And you're like, but Mark, if I have 50 people and that's 100 people on my plan, now it's $5 million. I can't afford that. No. There's this other unique stop insurance, right? So it's an umbrella that sits over all of your people, and it limits your liability for a given year, right, of the claim liability that you're going to have. So you have a cap called a specific reinsurance or stop insurance for each individual, and then you have an umbrella that covers all the people. So why do I tell you all this? Because there is a limit of liability for you. You know exactly what your worst case scenario is going into any given contract year. But as I said earlier, you have to take risk. Okay, well, Mark, what do you mean risk? Well, if I tell you as a 50-person company that you're going to spend $500,000 on your plan, there's going to be a corridor of risk. Typically, it's 20 or 25% above the number I just gave you. So if it's 500 grand, you're going to have $600,000 potential of a worst case scenario bad year. And you're like, wow, 100 grand? My practice can't afford that. Remember, you're being underwritten, and the underwriters are 95% accurate, roughly speaking, with the $500,000 number that I just shared with you. But there is that 5% probability that you employ somebody who comes on and they're sick, right? There's somebody who got pregnant with twins and they have of the babies. That's I can't afford that. No, you wouldn't pay that. The way a captive works is the first 50,000 you would pay. Then there'd be a shared risk layer where I would, and you would, and others in our community will pool. And the next $300,000 of that $500,000 claim is paid by all of us. Okay. And then the remaining 150,000 is paid by the stop loss carrier. So you see the elegance of that is you're tranching risk. You're saying you get to 50,000 as a liability, the community paid 300,000 of which you're a member, and then the rest gets carved off and paid by reinsurance. Okay, Mark, well, that makes sense for one claim. But what happens if I have a bunch of bad, sick people? Remember that limit of liability I talked to you about? You're capped at 600,000. That is your worst case scenario if, in fact, you have a really bad year. But most of the time, you're going to have a good year. 4 out of every 5, we call it the rule of 5 in insurance. 4 out of every 5 years, you're going to have good risk. This is like clockwork, Bryan. I can't explain why. I can just tell you that over my 35 plus years in this business, is how it works.
Yeah.
And that one bad year, the 4 years that you ran well, right? And you're banking money. You bank money to pay bad year. People are like, well, Mark, what do you mean bank? I pay my health insurance premiums now. Expense that, I just write the check every month. In fact, but on ACH, just goes right to the insurance company. Okay, no, I understand that. But in this particular case, when you enter into a self-insured plan, you're, as a CFO or a CEO, take your eyes off the P&L and lift them to the balance sheet. Okay, well, now you really confuse me. Like, what do you mean? Like, you're going to create a healthcare reserve account that you and your employees are going to put money into, right? You charge them per paycheck premium contributions. Most employers are charging 20% of the cost or 25% of the cost. I'm sure everybody's different. Some cover 100% of the single employee and they make their employees pay 50%. It all comes out of paychecks. Remember the pre-tax premium that comes out of paychecks. So you're putting all that money in a healthcare account on your balance sheet. And then you're going to have claims that come in from people that are accessing services, preventive care, primary care, surgeries, hospitalizations, prescription drugs, you name it, all the claims that are associated with all the healthcare services your people are getting. In the industry, we call it incurred but not reported claims, or IBNR. So when your healthcare reserves on your asset side of your balance sheet exceed your IBNR, that's your liability, calculated, by the way, by actuaries, that's called surplus. And that surplus used to be called insurance carrier profit margin. And now, instead of insurance carrier profit margin, it's on your balance sheet. Okay,
Gotcha.
but then what do I do with that? I'm like, well, you use it to pay claims, but when you have money, surplus money, you can actually now start to, and I was giving you the main point of this, you then invest. In fact, you have a responsibility as the plan fiduciary, right? Because you're the plan sponsor as the employer. You have a responsibility to actually reinvest those monies into making the plan better for your people. Okay, well, Mark, how do I make it better for my people? Oh, well, remember, the whole reason to do this is because you didn't know what you were paying for. So I call it the hamster wheel, right? And the less bad renewal. And people are like, what do you mean by that, Mark? I'm like, okay, you're a CFO with a blindfold on and you're literally running an hamster wheel. You think you're going somewhere, but you're not. You're running in circles and you're getting the less bad renewal. Well, what's a less bad renewal? I'm like, well, your broker comes out and tells you the insurance carrier told him or her you're going to get a 20% renewal. Then they go do their job of checking the market, beating up the insurance carriers, and they get you a 12% increase. And you're like, wow, that's great. 12%? I thought I was going to get whacked with 20. You ought to be pissed about that. 12%. That's 4 to 5 times higher than the rate of inflation, but employers have been conditioned to accept the less bad renewal. Okay, so I tell you that story because you asked me, how do you help dental practices? Get off the hamster wheel. And the only way you get off the hamster wheel is to get access to your data. And the only way you get access to your data is to become partially self-insured. So now you have data. Now you, not by person, Bryan. It's not like, what did Bryan do? What did Mark do? It's all HIPAA protected, right? It has to be HIPAA protected. But it shows patterns and trends of care that your people are seeking. And through that data,
it's really interesting. I 85% through, so I'm back to what you said because I was tracking for most of it. So I would suspect that we lost audience members who weren't able to track kind of the workings of the insurance plan, how it works. We have a webinar coming up where you're going to go through everything again in detail. And obviously, this being a podcast, you can go back and listen through it and track it too. The result is a type of, this is my question. It's like, is this you hit it at the end, that this is kind of a pseudo self-insurance where you're actually taking control and you are taking on much less risk than you would in a self-insurance type of scenario. Benefit of being able to invest that, being able to, instead of paying the insurance company the profits, you're investing that so that you're actually sort of controlling your healthcare costs on your own, correct?
100%, Bryan. And I would say there's an old saying, and I don't know who said it, but I use often. I should probably find out. You want to go fast, go it alone. If you want to go far, go with a team. And what this unique platform allows middle market employers to do is to share risk with like-minded people who speak the similar language. In your case, dental practices, right? They all share a common language. They are the way they connect with each other, but they can leverage their individual experience and their collective experience to create a better healthcare future for their people and for their businesses. And they do it by taking calculated risk, by solving problems for their people, and actually making their health insurance plans better, not worse. Which, when I say that to people, are like, Mark, that's not how it works. I'm like, no, that's not how the hamster wheel works. You're right. But if you're done being on the hamster wheel and less bad renewal, this is a way for you to exit that. And I do geek on, so I'm glad I set up yours for our.
Yeah. Oh yeah. It's great.
I geek out on it. I just see it so clearly, and I want everyone to understand how it's set up. This is not me selling you anything. I'm trying to educate you and open your eyes that you're actually not a victim of this. You can take control of it. It's participatory, though. It's not for people who want to press the easy button, accept the less bad renewal. If you're in that situation and that's the way you think and you're like, God, I don't have time to deal with this, then what I'm saying to you is not going to be appealing. But if you're tired of having that expense eat your bottom line, there's a better way.
That's why I think we are so directionally aligned in what we think, where we think healthcare needs to go. I'm arguing an unfair care is that the way to change the healthcare system is to actually have individuals take command of their own healthcare. And that's sort of the irony is like, if you ask the right questions, if you get your data, you start for yourself, so you can bypass the sort of siloed nature of healthcare, that then you will be a system. And you're doing the exact same thing, but on an employer level, where if employers band together, they can, versus handing the control of the health insurance companies, right? It's going to just, we can finally get control of the costs. And so definitely, I would certainly recommend, if you are in sort of, basically, if you're a group practice where you have, I think it's 50 employees, you said,
50
or more.
employees. Yeah, 50,
What's that?
75 employees, and then you've got 50 enrolled on your medical plan. But typically speaking, that's where stop-loss carriers like to draw the line. Sometimes they'll go down to 35, but very rarely they'll stick to 50. So.
Sounds good. So if you have, and we have, like I said, we have up, and there's a link this for that, and people go to find out more about the Captivated Health platform.
Yeah, they can borislow.com. That's BORISLOW.com, or as the name is, www.captivatedhealth, all one word, captivatedhealth.com. And or they could also email me directly. My email, Mark, M-A-R-K, at Borislow, B-O-R-I-S-L-O-W. Borislow is the name of our employee benefits firm, our insurance agency, and we are brokers and consultants who power the Captivated Health model. There's a team of 90 people behind me who help deliver the experience for employers. And we'd love to talk to anybody who's interested in taking control of their healthcare future.
Well, Mark, it's always a pleasure on something, and love the work that you're doing. So thanks for being on the podcast.
Thank you, Bryan. I appreciate being a guest, and I look forward to many more conversations.